Hello traders, happy Wednesday, good morning, good afternoon. How are you today? Please give me some okay that you can hear me. Give me some Y, some yes, something in the chat, please. Perfecto, thank you very much. So let's begin. Thank you guys, thank you, I got it. Thank you. It's funny, it's when I say hello guys, give me some okay, or no one answers or everyone answers. So it's always, there's never let's see the middle. All right, so let's begin, guys. I hope you are good. The market is moving nice. We got the surprise kind of from Pavel yesterday. Guys, 1 second, there is a cleaning truck outside. It's going to be noisy. 1 minute, I'm back, okay? Oh, that's all. I think they are finished. So we got a surprise from Powell, which, not as he always stated, suddenly states that the Fed might be considering a cut in the rates. Now, Australia started this week a scary trend. Canada mentioned they might go for the same step. Now the US, and that might take the whole market condition, from my personal view, into some kind of a mess. Big discussion here, why, and so on, but such frequent changes with what's supposed to be a stable tool for the central bank might cause more damage than benefits. It's of course early to judge, and of course I am the last person able to do that. My knowledge in the macroeconomics is basically like my knowledge in the Chinese language, pretty much zero. I can understand how the central bank thinks and what they're trying to do, but logically and historically, the chances for a mess are bigger than any contributions. I hope I'm wrong. So let's see how does that affect on the market, and what do we have on the setups we started to follow from Monday, and the new setups we have to follow from today. Okay, so let's quickly go over the short-term from the top. OZ CAD, we were looking for short-term sales. Right, the triple cycle, we wanted to see corrections. Corrections can happen in 2 waves or a range. This is the OZ CAD, and basically it is correcting, but personally I don't think this is worth to risk the money on. So what do we have currently? The daily, we don't have cycles from the higher time frame, so we are working only with the short term. Daily is bearish hidden divergence. So the 4-hour ideally to be corrected, right? 4-hour is the cycle and the divergence, so we expect the corrections, which currently happen. The 4-hour also right now starts to develop a possibility for a bullish hidden divergence, which is opposed to the cycle. For the bullish hidden divergence to form 1-hour chart should be a divergence by itself, and even though we don't have any clear obvious divergence on the last part, the whole picture here, as you can see, all these zigzags back and forth don't really contribute. So the way I love to deal in such situations is always tightening the risk. Tightening the risk is well, depends on 2 main factors: how the total exposure a trader has and how it works for him or her, right? So total exposure of all the positions, and what's the total risk with open positions, what's break even, what's already guaranteed profit, and so on and so on, total exposure and risk, and according to that make a decision. In such not moving scenarios, there are two things to do. First, cut completely, get out of that because it doesn't develop clearly, or if the risk is small, tighten. What does that mean? It means simply if you have, just for example, one lot, cutting it by 50% would make it go with half lot. If you have 0.1 lot, cutting it would keep you with 0.05 lot. Okay, so that's the idea. Why? Because according to the cycles, there is still room to go. Right, 38.2 or even 50%. If this will turn to be not a double but a real descending triple, then 50%. That still has a room, right? It's still about 60 points or so. Now, this is if it's tightening the exposure. And what does that help us? If it drops, there is still profit to do. If it doesn't, then the loss would be limited because the exposure getting smaller, especially when part of it already moving in the direction. Okay, this is the logic behind dropping the exposure. And of course, what to do if one is not involved with these false breakouts and convergence, and basically was looking for a new opportunity. Was there a new opportunity? Honestly, I don't see any. The only way here was this convergence, which got the retrace, and that's pretty much it. Since then, zigzags back and forth. There was a kind of attempt to break this, which is trying still to hold, this arranging conditions. Can we say it's really good one to trade with? Definitely not. And that's why at such moment, management is something which I do always. There are signs against on the market that it's not moving clear. I never let my positions to be fully exposed. I think it's wrong. That's my personal view, and this is the first update of the OZCAD. The view remains bearish as we did not reach the cycle zone, right? As long as the top holds, of course, but with a way more aggressive view right now as the market doesn't develop as we wish. OZ Kiwi. So the long-term plan is still buys according to the monthly and the weekly cycle. The short term, though, after the break of the trend line, as we discussed on Monday, that was the first warning sign when it's simply gone, right, broken. Then the idea was to look for possible two waves here and a new re-entry. Never got two waves, never got bullish divergence yet. So what happens on the short term? The pair is basically making any kind of corrective cycle. 61.8, we might get it towards 100, still has the room. Developing, it might be this way, it might be this way, slightly lower than, right, towards the 161.8. This is the area. Now, it does not have a new divergence to have new trades. So basically the long one we started to follow from March, remember? This one, the breakout here, is the only one that really is active for the long term. There is no new setup to work with currently for the long term. Now on the short term, because the daily has to develop this divergence, right, redevelop, and the 4-hour has to build in, meaning 4-hour has to provide here something like that, or to complete extreme divergence, right? That makes the OZ Kiwi possibly to be traded short term to the sells. Now this is against the very long term cycles, therefore the more aggressive approach, but on the shorter term view, this is tradable. Until when? Until the 4-hour and the daily fits in together and complete its bullish divergences. That would be the sign where the next buys were very likely to step in. Until then, on the shorter view, it's tradable to the downside. Now, the best approach for here, of course, retraces, and bearish sells with bearish evidences, bearish divergence, two waves breakout, Fibonacci retraces, and so on and so on. Any different strategy you work with for entries could be definitely usable in that case. Okay, that's for the Aussie Kiwi. Next one is the Aussie versus the dollar. Our goal was to get the correction towards the opposite bend. This was the bearish, potential bearish hidden divergence we were facing. Let's take a look what happened here. Daily chart reached the opposite band. This is developing a potential bearish hidden. Why potential? Because it never ticked down yet. 4-hour chart confirming the potential divergence from the daily. Therefore, game over for us. Aussie dollar moving to neutral. Okay, and we will see how that will move from here. As for now, it's impossible to know. Will that go and break the trend line and make new low? Or alternatively, will that turn around, make triple highs, and will change the long-term direction? At that moment, it's impossible to know. That's why at that moment, the short-term trade we've been involved with is gone, done, completed, moving to neutral. Next one, Euro franc was our short-term bounce idea from the area of 111, surrounding of 111. Long-term bullish divergence, expected corrective cycle. Corrective cycle could be two waves. Corrective cycle could be any kind of a range. Let's take a look on this pair. What do we have at that moment? Nothing. Still at the same area, same divergence. Basically moving some sort of a range. Does it have any bullish evidences, any bullish divergences to work with? No. Does it have two waves with bullish divergence to trade with the breakout? Again, not at that moment. So nothing to deal with currently with the Euro franc. Watching on the list, of course, having our eyes on it. Once the setup completes, and setup could be bullish divergence, hidden or two waves and breakouts, that would be a moment to look for the short-term buys. One more false breakout is also definitely possible. The zone is still the same zone surrounding the 111, and that's pretty much where we expect the fight. The fight not always is going in clear ways, not always develops like this. Of course, ideally, yes, not always, right? So it might go and be ugly corrections. The plan, however, is still drops with bullish evidences is a buy. Short term, because we are dealing here only with short-term cycles. Next one on the list, Euro pound. So the Euro pound, we were looking for fights at the level of 0.89. If it breaks 0.90, that's the levels where we wanted to reach and start looking for bearish evidences. So the 0.89 was reached right here. We have the divergence. We don't have, though, any lower lows, any trendline breakouts, or any turnaround in terms of triple lower highs, triple lower lows. So yep, the level is holding, the bounce is happening. Can't say we have any clear setup. So what are we following for? First of all, that might be a nice kicker pattern, right, with the clearance area. This is a clearance area, as you know, stop losses of early sellers, right? If it becomes a verification candle, what we will want to see, verification candle means close below yesterday's low. That will be two straight reversal candles to the downside. Why it's good? Because we have the level from the 4-hour chart cycle. What will we want to see on the 1-hour chart? Turn around. Since we don't have false breakouts and lower lows, which currently is here, our option is to get triple lower highs, lower lows, and then who would be looking to sell the rallies. Okay, that's for the euro pound, and this is our watch list. Euro versus the Kiwi. Our view was bearish. We were expecting a move down, 170 first duplication level, 169 final. There was one thing that happened here which caused a tightening exposure, and that's when the 4-hour created a divergence right here. At that moment, as always, we talk about tightening the exposure is the right thing to do. That means cut or partial cut. If it's full cut, then no new opportunities on the 4-hour. If it's partial cut, then the other part is running. 070 was reached. 169 might be the final target. The bearish pressure is still on. What and when the 4-hour divergence became irrelevant or showed a weakness, you see that this is the first push happened when the 4-hour has the bullish divergence, correct? How do we know it might be a trend reversal to the upside again? If the lower time frame, this would be a bullish trend. How the bullish trend is defined? Triple higher highs, triple higher lows. What happened was only double. Is that enough for a trend change? No. When the 4-hour became suspicious and the bullish power became irrelevant, when we crossed one straight leg below all the Fibonacci levels. This is the moment where we understand the bulls are not ready. No triple highs, higher lows. No possibility or a hold over the Fibonacci retraces. Straight move below. Game over. At that moment, the trend was broken and the momentum continues. Until where? Same idea and same cycles like it all started before. Right here. So that's the final possible destination. And as long as this trend line, which represents the 2 waves correction, holds, the pressure remains bearish. Next one. By the way, questions until now, guys? I quickly go and reviewing our trades for Monday before I will share the new opportunities. One of them already was shared. This is the Aussie Kiwi short term, right? The sell rally is short term possibility that it provides us. If you have any question about anything explained, please let me know. I'll be more than happy to explain that deeper. Okay, so don't hesitate, please. Next one, euro versus the dollar. Break of the trend line, higher highs. We are bullish. Let's take a look what happens with the euro dollar. Holds the breakout, makes the higher highs. Bullish plan. So this is the first leg happening. So we would expect corrections and continuation. If this is the first leg, then it has to be cycled by itself on the lower time frame, and it is triple cycle divergence. So we would expect 2 waves or any sort of a range, and then looking for buys. This remains the plan. Invalidation, of course, the last low for the daily. What should we always remember? If it crosses one straight leg below 61.8, it's a warning sign. Always remember that. Pay attention to that. Okay. Personally, looking for the buys. I myself am involved with the longer term once this trend line is broken and the pair starts to climb and make higher highs. So for me, this is a long-term buys with the weekly cycle. Right, as you remember, this double cycle. So we have here long-term call and also short-term probabilities to follow with the inner cycle just explained. Let's move on. Next one, pounds. Now, before that, I want to cover two pairs that I've been asked a lot about: Euro Aussie and Euro franc, and Euro CAD. Sorry. Now Euro Aussie is still not clear to me. I was expecting us to trade it after the news from Australia, but I have nothing clear in my view here. This is still a bullish hidden divergence, which possibly could make this happen before the sales takes place. On the same time, 4-hour chart does not regaining any bullish momentum. It's struggling within this pattern, so maybe it's going to break down. Hard to say, hard to trade. Nothing clear. That's why Euro Aussie is yet not on my list, not back on the list. And the Euro CAD, well, I am after sales here, but again, waiting for clearer sign. As for now, we are holding this range, right? So the sell pressure should be back. What I want to see is the break of the trend line. If it managed to make it and hold, looking to sell. We'll see how that develops. So back to the report and our follow-up: pound Aussie and pound dollar. Let's start with the pound Aussie. So we are bearish long term, expecting the daily to be corrective, therefore 1, 2 or a range. Do we have reversal signs? From daily, not. From the 4-hour, this is a cycle, triple ascending cycle. Right? And we have the reversal right here. Divergence, of course, in play. So we have horizontal trend line, we have alternative trend line, we have this level also broken, and since then higher highs. So according to that, our expectations are for corrections. If we take a look here, we also are expanded towards the 161.8 of this cycle and very close to the second legs. Triple ascending, both levels 161.8, big respect, right? Very close to this area. So we expect from here corrective cycles. Short-term pound Aussie is bullish view for corrections. What kind of corrections can we face? Two waves or some ugly range. This or other way around. The view here is short-term to the upside. When will that come back again to the sells? Once this corrections is over and the 4-hour completes its corrective cycle, this will become the next plan. Okay, so that's for the pound Aussie. And for those of you who are riding all the sells from the initial beginning point or later, this is a good place for cash outs, or at least partials. Pound dollar is our next one. So what do we have here? Also, we were looking to trade the level of sorry, the level of the special cycle 261.8, bullish divergence, short-term cycle only. Why short-term? Because it comes only from the 4-hour chart. That's what we were trading. Each of the legs cycle by itself, massive divergence. And our expectations are for two waves or a range. Both scenarios are definitely possible. And before we can go and sell further on, if at all, we're still in the corrective view. So what happened since we got this bullish hidden divergence, which made the push, and right now we are facing triple descending cycle. So like with the euro dollar, our expectations are for two waves or range, possibly one more shot to the upside, and then we will decide further on. At that moment, the plan does not change. However, what is important here is again management, right? If you're involved with the short-term buys, make sure you do not let the profits go, partial cash out, moving stop loss to break even, trailing stop loss, any kind of management which will guarantee you are not exposing yourself to any possible random shot to the downside. The view is the same. We are holding the same cycle level. So up to 38.2 or 50 is our levels where we would want to see that climbing. If it's not making the two waves, then we are going to see that fight very likely making some a period of a range. That's for the pound dollar. Next one. Sorry. Here. No, where is that? Did I close my report? Oh yeah. 1 second, guys. Okay, back to the report. Yep, New Zealandians. I'll reach that. Hold on, I'll reach that. I'm going over all the positions, okay, that we discussed, over the ideas and the levels we were talking to follow, and also we'll share new one. One of them already in is the Aussie Kiwi. So next one, Kiwi CAD, our view, corrective cycle, two waves, which happened. So game over with the buys. Now we're looking forward to the sells. This is the trend line that we want to follow. Daily is developing a very hidden divergence. So once we are back on track, we expect the longer term continuation. So our view is sells. Okay, looking for the sell continuation. Once again, where it comes from the weekly cycle, triple double, first leg. We expect further continuation. Okay, so trend line breakout, and we will start to look for sell the rallies. All right, that's for the Kiwi CAD. Kiwi dollar, we were bullish, expecting the two waves to develop. That's the levels we wanted to see, clearances, right, or even slightly higher. All that are clearance zones, as you can see. What are these clearance zones? The areas from the previous trend where those who sell early after corrections protect their stop losses, and clearly that's the levels. So what do we have as for now for the New Zealand dollar? Let's take a look. So here we are, we reach this area, cleans, actually also this one is clear, right? So what's next? We can see the slowdown here. It's not the divergence we are going to trade, but this is a continued divergence, and which slows down. The way I see that for this pair is something like that. But this was the first leg. This is now the second. This should be corrected. And I do expect one more push further. So I think that's what we're going to be exposed to. From there, we will see how the higher time frames look like. But on the shorter term, this is a good place for the partial cash outs. And for those who are looking to rejoin, that's what you will want to see. Two waves down, or at least a good deep correction with a bullish hidden divergence. And then possible further continuation. Why I expect a continuation? Because both cycles are equal in terms of development. This is a leg with a cycle by itself on lower time frame. This is a leg by itself on lower time frame. 160, is not respected, and mainly because we don't have divergence on this cycle. Therefore, very likely it's not completed, and very likely this is what we are going to face. Okay, that's the plan for the New Zealand dollar. Let's move on. Last pair on this list, and then we discuss about the new opportunity. Dollar yen, running sells. Let's take a look what happens here. Daily chart, possible divergence. I say possible because it never ticked up yet. And on the lower time frame, we do not have yet any false breakouts with higher highs. So retraces are still considered. As long as we don't have the turnaround, the pressure is still bearish and the expectations are accordingly. Could we face corrective cycles here? Yeah. The level is critical. We reached the 61.8 of the triple cycle, almost. Clearing all the stop losses on the way. Potential divergence developing. Psychological level 107.50. All the reasons for possible retraces. They are expected to be short term though. All right, next is a new opportunity coming to our list, and that's the dollar Canadian. I shared the video yesterday in the group. Now also I uploaded it on YouTube, so you can go and follow here, guys, on in the channel or YouTube channel. Explain that, but I want quickly to go and explain what do we have here. False breakout. Well, of course the cycle is in play. False breakout, engulfing with beautiful verification candle, bend to bend movement, straight move from Bollinger to Bollinger within 3 candles. Right now we are next to this area. Ideally it would be cleaned, but it reached very, very close to that. What do we have currently is Bollinger Band duplication, and 1 hour chart is a cycle by itself of this leg. So assuming this is the first corrective leg, we would expect correction and continuation. If this is the first leg of the correction, then 1 hour chart must be cycle by itself. 1 hour chart is a cycle by itself. Divergence in play, we would expect retraces here, which we will want to go and to look for bearish evidences and sell. Not jumping in a sell because that's what the market shows. Wait for your setup. Let it happen. Happens, we know what to do. So the way I see that, dollar CAD is getting ready for some nice sell opportunity. And this is a new one to follow. Okay, let me check my list. Dollar franc, next one. So what do we have on the dollar franc? According to weekly, we're still in the bearish view, correcting this. Right, so daily still to develop 2 waves. We have no divergence in play from the daily. Therefore, our expectations are still for that. Currently, cleaned, bounced. Okay, we expect pullbacks and further sell zone. Checking on the lower time frame to see the probabilities we have. This is kind of a triple ascending cycle, which we can put here. Okay, no divergence in there. That's what makes the trend very likely to continue. So the current scenario is only this divergence on the last leg. So we expect it to retrace here. Ideally bearish hidden divergence or 2 waves, and for sell continuation. So dollar franc, our view is this. Further sell continuations after rallies. And that's from the view of Forex. Next ones, commodities. Gold broke the highs, expecting it to move further. Currently, well, it moved further. We expect any pullbacks and continuation. It looks like there is room to go. Same exactly with silver, which broke the trend line, made the higher highs. Oops, apologize. Broke the trend line, made the higher highs. Convergence in play, retraces and continuation. That's the plan. So this is what we are working with. You can see it clearer here. Same like the euro dollar or pound dollar, same idea. Okay, two waves or straight movement bullish hidden divergence and continuation. Oil, what do we have here? Yeah, running cells, no reversal signs, and that's relevant until now as well. No reversal signs. One thing to pay attention to, look at these clearances here. It's clearing all the stop losses of all the buyers right here, getting closer to the psychological level of 50. Daily comes to extreme. MACD lower than 6 points. Right? So of course it's not an end of downtrend. It's not an absolute low. It's a sign not to buy. It's a sign to get out from the sells. 4-hour chart expected to develop this divergence here soon and bounce. That's the next logical thing for oil. Levels to watch, as I said before, close to 50, the psychological level, even slightly possibly lower. It's all the same zone. Once this divergence comes in play, this becomes a cycle. This would be 60-18 expansion. That's your area. From there, game over. Okay. Indices, DAX bounces with the bullish divergence. Our expectations, some kind of correction here or some kind of a range before possible continuation. We don't have currently two waves, so it can definitely still play in two waves or any sort of a range. Same exactly with Nasdaq and the rest. Nothing really changed there. Bullish divergence, ticks, expecting some corrective cycle and further continuation. That's pretty much it. Okay, so something like that. Okay, of course, can talk about all of them, but they all will be the same. Stocks. So the invest has nothing new. Louis Vuitton still holds the invalidation area, but failing to hold the breakout. Very suspicious sign. And when such things happen, my personal view, tightening. We might be exposed here for another false breakout. So very suspicious sign with this, tightening the exposure when such thing happen. That's pretty much it. And the cryptos, Ethereum, Bitcoin, still holding the breakout that we discussed. Still looking for the further rallies. One thing that we remove now is the one that paid before, the Ripple. Ripple paid here with this breakout. Beautiful risk reward, then blocked divergence. As we discussed, partial cash out or at least stop to break even or trailing it. After that, the trend line was broken, lower lows are created, game over. At that moment, nothing is new, clear. I still think we are going here for another rally, but there are no new good signs for that. So Ripple is removed from the list. Questions? Ideas? Anything else from you guys? Keep in mind 2 days sorry, to go, and we have non-farm payrolls. Okay, so careful. That's what I'm saying. And remember, it's always good, but especially on sensitive news and market conditions, wait for your setups. Do not create ones. Do not trade based on it will be fine. Why? Setups increasing your chance. They not guarantee you're going to be in a winner side, but they improve your timing and your probabilities, your odds. As simple as that. Where you wait for a setup, you rely on technical instruments in the chosen direction. That will not be a guarantee for a profit. That will be a better odds for your trades. And that's what it is when it comes to statistical trading. Remember that. It's always important, especially in such weeks. That's all for today. Thank you very much for being here, guys. If you have no further questions, then I'll see you in the Telegram groups, and I wish you a wonderful day. Tomorrow, Jordan is with you. I'll see you in the groups. Thank you for being here. Ciao for now.